Good morning, guys. Welcome to another episode of Full of Transparency Trading. We have new information, so we've removed all of our drawings, and it's time to draw out some new lines. But first and foremost, we're going to go through and we're going to delete all of these alerts. And how you delete them, you can just put your mouse over it, click the X right there, and tap the enter key. That's the fastest way to do it. Otherwise, you're going to be moving your mouse all the way over here, and it's going to be taking a lot longer. So just tap the enter key, tap the enter key, tap the enter key. You can get rid of these very quickly. You can even move them all into one big bunch and then do it that way. But this is a very quick way to just go ahead and delete all of these. And since we have new information, we're going to head over to the 4-hour time frame, guys, if you guys aren't already there. And we're going to start drawing out all of that new information. Delete all of these. We don't need any of these left over. We want to have brand new everything. First, we're going to go over to a single screen. Good morning, by the way. I never say good morning because, it's not that serious to me. But click on the plus sign over here. And the first area that you want is this area right here. So you want this to be within your zone. So you want to go from the top here all the way across. Keep the new floor that we created right here and bring it to this point here. And that's it. We just need this part. We just need this part. We need this top part, and we need this top part and this top part. So we're going to start off over here on the left hand side. First thing we're going to do is put the alert line right over this area right here. A strong area of resistance. Create an alert. Create an alert line at the body of the candle right here. Strong area of resistance and support. Create an alert. Watch, as you start to do that, you're going to start to see, hey, we're meeting it. See, it was support right here. It was support right here. It was support right here as well. We're just slightly above it, but it was still support. It still worked out. Then we have a slightly lower level, so we're going to go to the left, make sure that it's connecting with that, and we'll look for this right here further back. So let's go ahead and put a mark right there temporarily, because that could just be a wick down. If so, we won't put a blue line. Click create, and then just go to the left and see if you can find an area that agrees with that. Okay, so there is an area that agrees with that right about here. And the alerts are probably going to this area right there. So we're going to put our blue lines from that point on. We're going to start over here on the left hand side. First blue line, bring it across right there. Situation, we're going to make a box. So we're going to click on our rectangle, click that white line where the blue line is, drag your rectangle across, keeping it on that white line, and we're just going to drag it all the way through. So this will be a demand zone for us. See, drag it all the way through. And no, you don't have to do the double blue lines. You can just have the demand zone set there. And now if we come down and we touch the demand zone, you know that's a strong level of demand. I still have my white lines within it, but each line of the purple line represents a part of the demand zone. This is demand zone floor, this is demand zone basement. This is the current demand zone. Once we break through there, we'll be going back down towards the other area and we'll chart it out again, right? Now to start adding our blue lines for areas that we can look at while we're actually trading. These blue lines are very important for when we're actually trading. So we're going to start out with the lowest point. You always start out with the lowest candle. So add one right here. Place alert. Create that alert. And we're going to do the exact same thing we did there, but this time with blue lines. We can go back and check. We can see that it's above the gap up, so that's perfect. You want to place it on the white line that's above the gap up. The white line below that is just a warning of the area that we can go lower to. But you'll place it on both. Why? Because when you're on the regular smaller time frames, you'll be able to see both of these as areas of confirmation for you. Bring it all the way across to the new week. And we're going to take it to the end of the month as well. We always take it to the end of the month. The white lines help us keep our lines straight. That's why we love to put the alert lines in there. Then also it will tell us when we actually reach these areas. So they serve a dual purpose. They help us keep our line straight, and they tell us when we actually get down to these areas. So you guys know, we hit the text box, put the text in there, demand 0. That's the lowest demand zone, right? Another text box. Demand 1. So that's our primary demand zones right here. Our lowest demand zone is right there, demand 0. And now we're going to start going up, but we're going to go back to the left. We want to always keep the left in mind when we're doing these strong area of support. So we're going to go ahead and add alert there. This was a strong area of resistance. It's now a strong area of support. You guys know the deal. Text box, slightly above it. Support 0. That's the first support level before we hit the demand zone. So it was resistance, it was support, then it was resistance, now it's support again. Go back to the left. Alright, we don't need the top of this, but we do need the top of this box right here. Why? Because it acted as both support and resistance. So it was supporting here, it was resistance here. So we got the white line there already. Draw it out. That way we can always go back in time and look at where we got these lines from. You can go back in time, you can see the gaps, you can see everything. Of course, there are always smaller areas that are acting as well. So since we're above it, there's another line of support. It used to be resistance. Now it's support 1. So support 0, the lowest level of support. Because after that, we go all the way down to the floor. There's really nothing after that. Yeah, sure, this demand zone from a previous time frame, but this is demand 0 because we go all the way down to this. Then we come all the way back up to what was support before, and it's resistance here, but then we immediately go back through it. So that's why it's still support. Support, the next level goes back up. Okay, so now we have support at this level. Wicked it out a couple of times, wicked it out a couple of times. We'll add a blue line right here just because there are multiple areas that touch this. So when you go right here to this, what used to be resistance and then became support right there, that is an important area. So we're going to go ahead and draw our blue line from here to there. And you'll see that there are several times that you touch. You wick it out a couple of times, but there are several times you touch this, so it gives you confirmation. It's also where the 200 EMA is. So for me in the current time frame, as I click my T, I'll make this my main support. This is one of the key areas. This is a hot area right here. When we come down to the main support level, you're gonna have some strong reaction out of it. Look, we went all the way up above support, came back down to support. Went all the way above support, came back down to support. Went all the way above support, came back down to support, finally broke through. But we got strong reaction. Every time we touched it, we reacted for about, let's see, this is from 84 to 60. Ooh, that's a good little move right there. We reacted for about $80. So all of these are $80 excuse me. All of these are $80 reactions. We finally break down below it, going way down further. So now that this is the 4-hour 200 EMA right here, right? You now know that when we come down here, just like before, we're gonna have a very strong reaction to the upside. So, and the 200 EMA came to meet that. It came to tell you the story that, hey, I confirm that this is a strong level of support, right? Or a demand zone. So this is demand 0. If we fall all the way back down to the 53 area, we want to keep that intact. We go all the way back up here. So now we're just drawing all of these new levels, right? So now where this used to be resistance right here, we're going to put a white line. And this is our new level of strong support halfway into that gap up. Now, what I was thinking before is we had to come back down into this gap and fill this to right here, but we don't. We just need to fill it to support, which is about halfway. Will we eventually fill that gap? For sure, for sure. But when we get down there, we'll be going down to this line right here. And notice, I don't need to go all the way to the left anymore because I have plenty of data from this point in August to right now to know that these are current levels. And we already looked back at the past to find that this used to be the floor. Oh, didn't mean to do that. So right now, this is the floor. We're gonna add a text box. Put it right above. Type in floor. So right now, this is acting as our floor. So we hit there. You got all these demand zones. Put a slash. Our primary. So this is the floor, demand prime. Come down there. We'll be meeting this area right here. We'll have a violent reaction back to the upside. So now, the new data. The new data is giving us something to look at as well. These wicks matter because there's no bodies of candles in the new data. So right here, add alert. Since there are no bodies of candles down here, these wicks matter more than anything, so you have to mark out the bottom of the wicks. Right above your prime demand zone. And demand prime in between there. So now you can click this box here, bring it between these two. Cancel that. Click it one more time. Make sure that you're on the line to the other line. Bring it all the way across, and now you have your floor and your primary demand zone marked out this way as well because we haven't broke into it. But now you know that if we break down into it, there should be the strongest reaction to the upside off of that. So now we need the first level of resistance that was created after this push up. So that's going to be right here, the bodies of these candles. Add alert there. Create an alert line. Right below this candle, in between this candle break here, I'm going to push back down. Create an alert line. Take your blue line. And you notice that I'm starting to go further and further to the right. You don't have to have them go further back because there's no data from this time frame further back. So put it on the secondary line right here. And then put another one on the white line above. When you're on a smaller time frame, these won't be as close. So that's why they're important still. The 23 EMA is way down here. That's an area that we're going to go to. So this would be our current area of support. Get a text box. Current support. Reason it's not a demand zone is because it's not all the way down the floor. We like our demand zones at the floor. We have the main support and things as we go down through there, but this is our demand zone at the floor. All right, moving on to the next spot. Right here at the top of this wick and in between this candle break here, very important area. This is going to be our strong support area. We're going to put it right here. Why? Because before it was strong resistance. We wicked through, came back down to it. So we're strong resistance. Now it's strong support. Tap your text. What's going on?
Bye.
Give me a hug. Have a good day at school. Bye-bye. Sleep good. You was waiting up for me. Next time I'll come get you. All right? Come here. Let me fix you. From the room. If I'm not home, and you go to sleep, I'll bring you where I'm at. Okay, so we have our strong area of support. We have our bounce catalyst right here, where the bottom of this wick is. This white line is just a bounce target, so we will put a text there. As a bounce target, so these two areas give you a bounce target. Right here is going to be resistance. Current time frame is resistance. Why is it not the support as well? Because we're below it currently. It's holding us down, pushing us towards our bounce target. And then our ceiling / supply zone. Try to make sure we get right at the top of the bodies of those candles. There we go. And we're going to go to the top of this wick as an area of rejection. Add alert there. And for our supply zone, we're going to use the rectangle, of course. We're going to go from white line to white line. Don't need anything more than that. Let's try to get that. Let me enlarge my screen, try to get that a little bit more accurate for you guys. There we go. That'll help. Now we're going to go from white line to white line. White line. Let's make sure we're lined up. Bring it across this white line. Add your text. And that's your supply zone / your seller. So you have your resistance right here where we were supported before. We wick below it, we push below it, we're holding below it. It was resisting right here, we pounced through it. You got your supply zone way up here. We're gonna give you one more level right here. So you got your bounce target, your strong support. The reason that we mark these all out is because of the lower time frames are going to matter. And that's it, you guys are done. So for the morning, we have marked out all of our areas. Very clean chart to go off of. As we go to the smaller time frames, you're gonna see some agreement there. You see it was supporting before, now we're below it. I can move it down a smidge to about right here. There we go, we'll move it down to about right there. Now it's resisting. Nah, I kind of like it where it was, but that's fine. We'll keep it where it is for right now. You see that we bounced off of that, came through here, bounced down here, came through there. I want to create one level right here on the 1 hour because this is important on the 1 hour time frame. This rips through a whole area and acts as support and then acts as resistance. So I want to just draw that out, leave it there. 15-minute time frame, you're starting to see some more confirmation of the 15-minute time frame that we kept bouncing in between this zone right here. So this $6 range right there is important to the current time frame. Notice that our blue line meets up with the 15-minute 200 EMA. That's perfect. So that's our first area up point of interest right now. When we get down here to react to the upside, the next level is going to be down here where we had resistance and now it's support. So that still matches up perfectly as well. And all of these came off of the 4 hour time frame. Look at the 15-minute and how these are confirmed on the 4 hour time frame to rip through here. These are a lot closer than the previous ones that we had, which is why we decided to delete all of our old ones, because in the current move set, we're having a lot closer things happen. So support and resistance. Let's add another support and resistance line for the 15-minute right here for the smallest time frames. And yes, I will add these on each time frame so that we can have some macro adjustments that are made as time goes on. These help out with trading on the 1 minute. So let's go down to the 5 minute. Refresh. Look at that. All right, so we know we're pushing down to this line right here. We're below it. That's going to be the 15-minute time frame. On the 5 minute, this area is important right here. So this is a 5-minute support zone. We're going to add an alert there. We'll place the 5-minute support zone. This will help us trade off in the 1 minute as well. Like I said, we'll add each of these because each of these are going to be important areas that we react off of. We want all of the areas that we react off of on higher time frames. We have the highest time frame setting the big moves, right? We have the lower time frames telling us how to trade off of our 1 minute. We're pushing back towards this area of support right here, trying to break up to the white line that I have there. Don't really need to place a blue line over that white line because this is the main line that we need here. So everything is marked out, guys. That's how you mark out your chart. As far as what we're going to do today, it's Friday. The contracts are the cheapest. So simply put, this is what I feel is going to happen this morning. There's no 100% accuracy to this. We're in a downwards trend. I think we're going to continue our trend until we hit down here at the 200 EMA, and then we'll start to have some reaction to the upside. Contracts are very cheap right now. They were at a premium to the upside up here, right? So now that we're below the premium heading into the demand area, we're going to go ahead and flush this on out to down here, and then we'll have a reaction off of that 15 minutes if we don't break it to take us back to the upside. We're already approaching the support area right here. That was previously our high. I want my 15-minute lines taken out too. If you go to the 4-hour time frame, you'll see the 15-minute lines as tiny little lines. I'm going to stretch my 15-minute lines out too. That way they're here for a long time, so I don't have to keep making these adjustments later on down the line. I'm here for a good time, not a long time, you know. All right, so we got everything drawn out, guys. You don't have to copy that, but you can learn from this and you can do your own, and these levels will support you as you go on your trading, right? As you do your trading, they'll tell you, hey, possible times to get in, etc., etc., you know, when to get out. And normally these actually react exactly how I feel they would react, right? On a regular basis, these work pretty well for me. So I like to do it. I like to use it. You're welcome to use it as well. But this has been another full transparency trading session. Be careful out there. Take the easy money. We went down to 570. So 570 flat, 568 is what we're looking for right here, because that was the original push up. Let's go to SPY. Look at the pre-market. SPY pre-market is at pretty much where it closed out yesterday. We haven't really had much movement beyond there, so we're back down to where we closed out. On the day, everything is kind of down a little bit, but we're trending back to the upside, so not too worried. Just want to see us break these two levels, head down here again, have a nice reaction to the upside, you know, and go on with our trading day. So we're heading down. We're into the discount area now. We want to see us push all the way to the floor of the discount area, maybe tap the 15-minute 200 EMA, and then head on up from that point. I need an alert at the 15-minute because that's an important area. It's an important area for our trading day. All right, you guys have a great day. Thanks again for checking out the video. If you have any questions, leave them in the comment section. I'll get back to you as soon as possible.